Andrew, good morning.
You had a lot to say for yourself, Jeff. Good morning.
Generally I'm okay being wrong. And in this case, I'm particularly joyful.
Yeah. Well,
uh,
so Bank of
we,
Canada came in this morning and no real surprise, dropped the rate by 50 basis points. So that was kind of expected. Obviously, it was going between 25 and 50, but they went for the jumbo cut. So that's a second 50 basis point cut in a row. What does that tell you?
I took a look at the press release this morning and the global economic overview. Their points are United States, robust economy with strong consumer spending, the euro area, signs of weaker growth in recent indicators, China, policy measures and strong exports support growth. Household spending remains weak. Global financial conditions, eased financial conditions globally, they say, with the Canadian dollar depreciating due to the strong US dollar.
Yeah. And I think, again, we have to sort of make our listeners aware that the Canadian dollar, it's not just a story about the Canadian dollar, it's actually the strength of the US dollar, and currencies have across the board weakened against the US dollar. So Canada is just one of those many currencies that's taken a hit. But that being said, still the dollar is hovering between 70 and 71. I checked this morning actually, and right after the rate announcement, the dollar actually went up. So it's trading just under 71 cents. And I think the markets had already factored in a 50 basis point cut. So no surprise. And that's why the dollar maybe bounced up a little bit from after the rate announcement this morning.
Very nice. Canadian economic highlights. GDP growth grew by 1% below the October projections. Fourth quarter outlook also softer than expected. Weakness in business, investment, inventories, and exports. Recovery in the consumer spending and housing activity as lower interest rates take effect. Unemployment, as you mentioned, rose to 6.8% in November, with slower employment growth relative to the labor force. So wage and productivity show signs of easing, but remains elevated compared to productivity. So lots going on. Everything as you suggested. I'm happy to have my counterpoints refuted by a lowering, and a good size lowering. And one of the things that we talked about as well is that with this one jumbo cut, it doesn't really make that much of a difference. But when you marry it with all the other cuts, the interest rate coming down, it's certainly, I think, going to put a lot of positive expectation, increase sort of consumer confidence, and allow people to get back to doing whatever they need to do.
So let's focus in on the real estate aspect of this, because we're realtors. Obviously, we know what the global situation is, and the Canadian economy is definitely in a tough time, and many analysts are saying that we're in recession. So obviously, that's why the dollar has fallen, and that's why interest rates are also, Bank of Canada have lowered their benchmark rate quite aggressively to try to jumpstart the Canadian economy. So obviously, October, November, we saw real estate pick up. That was probably on the heels of a number of rate cuts starting in June of this past summer. And now we've got another big rate cut here in December. I guess we'll call it the Santa Claus rate cut. And there's no doubt, and tell me if you agree, and I think you will, that this is going to help provide some stimulus and renewed confidence amongst many of those that have been sort of sitting on the fence thinking about buying a property, that they're going to it's going to push them off the fence and help stimulate and generate more real estate activity in 2025.
I think so. When I think about what we're doing and where we're at, again, we're not economists and we don't pretend to be. And all this speculation to me leads to that one thing, which is this going to help the market or improve the real estate market? And I think anytime rates come down, consumer sentiment, people can't wait on the sidelines forever. And this is just one more good reason for them to go ahead and do what they need to do.
And jump in. Yeah, there's no question. I also took a look this morning, again, because we've mentioned this before, that the Bank of Canada rate does not directly correlate to the longer term mortgage rates, so call it the 5-year rate, because most Canadians actually hold a 5-year mortgage or get a 5-year term when they take out a mortgage. But I did check, and the Canadian bond yields have also fallen quite a bit against where they were a few weeks ago. I think we're down about 25 or 30 basis points on the bond yields. So that's also an indicator that the weak Canadian economic output And so there's a possibility that the Canadian banks may also lower their 5-year rates going forward somewhat. So we'll have to wait and see how that goes. But I think any rate cut does provide buyers with a little bit more optimism, creates more of a positive sort of sentiment, and will probably help stimulate the real estate market. For ourselves, I've noticed in the last few weeks, once again, we've started to get more calls from clients for whatever reason, looking to get into the market or looking to do something. So our calls have not sort of dropped off. It's remained fairly active even into December. Clients looking to actually, mostly we're getting more calls on the buy side. It's probably no surprise, but I do expect once we get through the new year into January, latter part of January, that we're going to see the market activity trend up nicely as we get into the latter winter, into the early spring market here in Vancouver.
We're seeing the same thing. We've got a couple of places, contracts out right now for buyers, and they seem to be more willing to dive in. And it just goes back to the thing. Like, if you need more house, if you need less house, if you need a different house in a different place, whatever you need, you can't wait forever. Those life events that are happening and transpiring, they don't stop because of the interest rates. And if you've been waiting on the sidelines because if interest rates come down, I'm going to go ahead and do something. Now that they have, it's just one less reason to delay. So,
yeah, I mean, if this isn't the green light, what is? So no
exactly.
excuses for anyone looking to buy, and you've been waiting for lower rates, then this might be a good opportunity to sort of hop in. And I think over the next number of weeks still, if you're a buyer, you're going to be out there looking with little company. It's not overly active. And we have clients that just purchased properties, no competing bids. They were able to actually do proper due diligence, take their time. And I'm highly confident that both those properties in a busier market would have sold into multiple offers, which I think is much more likely going forward as we get into sort of February, March. So like you said, you can only hold off so long. This is probably a great time to sort of do the math and see maybe now's a time to sort of get serious and get your game plan ready ahead of everybody else.
I think so. And if you have a place on the market right now, I think you can take advantage of the fact that there are buyers out there. They are looking, and the inventory is slightly reduced by people taking their home off at the end of the year, thinking about spring. So less to choose from. I think it's a good time if you're a buyer and you find a great place. And if you're a seller and you're on the market and need to sell, I think both of those are good positions to be in.
So Jeff, as we approach the end of the year, we're going to see how this all plays out. Maybe give it a few weeks into January, and then we'll sort of, although I think we're going to have a recap as we get into the new year, just a year-end recap. Is that correct?
We'll do a market recap just before the end of the year, and then we'll once again make our predictions. I will try to be more accurate.
Hey, listen, sometimes you get it right, sometimes you get it wrong, and that's just the way it goes. Listen, Jeff, yes. Always great conversing with you on this. Of course, this was a big day today to see what happened with interest rates. No surprise, 50 basis points down. So this bank rate now sits at 3.25. It's come from 5 to 3.25, 175 basis points down. And so let's see how that gets our real estate market going moving forward.
Absolutely. Andrew, have an amazing day, and we will talk to you soon.
Sounds great, John.